And we are live. So, the SMB show, the number one place to find all the news and information and updates on anything M&A and business related in the UK. And we are gradually starting to talk a little bit about more about the US, with us having some clients and being quite active over there at the moment. So there's nothing huge to report since the last one of these that we did. The only thing I probably would say is, the Bank of England holding rates at 3.75%. I would say is a decent indication, considering there's still a bit of inflation risk, some geopolitical tensions. You know, that's still hovering in the background. So it is good to see that those rates have been held as of right now. Acquisition debt is still pretty stable, which is good. We've still seen decent newer products coming to market as well. So I don't think it's going to be massive changes there. Hopefully, inflation, does get kept under a bit of control. So, I don't think that the UK economy at the moment could handle an increase in rates the way things are going. Confidence isn't in the greatest place as it is, right? So I don't think business owners and people in general would like to see any more friction or tension there. But what is quite interesting, and this is, I would say, despite all that geopolitical uncertainty, and not just what's going on in geopolitics, but just going on in politics in the UK in general at the moment. Still a lot of uncertainty and changeover with new PM, etc. But weirdly, I've seen that UK consumer confidence has reached its highest level in 3 years, which I think is wild. So, yeah, at the moment, we're definitely not going to talk about politics on here, but I think the changeover from Keir Starmer to Andy Burnham, especially in the short term, it is very, very, very early days, but consumer confidence seems to be slightly changing. And also, 17% of businesses in the UK has increased turnover last month. So, it is good. The confidence is there flowing through. It would be nice to see the sort of a breakdown. Maybe we'll do a bit of an analysis next week on which industries are seeing that uplift compared to the ones that are still suffering. So I guess the agenda for today, first of all, I think a good place to start is you've been on your travels. You've been over at Guernsey over the weekend. So yeah, give us a bit of an idea of what's going on over there and what your experience was at Guernsey. I guess it's your first time there, right?
First time there, yeah. First holiday you've ever granted me. So that was nice of you. I had to get a double sign off. No, we've got a client over there, and there's a couple of investors, but one main investor who's a bit further down the line there as well. So went and met them on, become friends obviously with them as well. So went over there, felt like a good excuse. The weather was great. The island's beautiful, to be fair. It reminds me of Britain, kind of like a Cornwall, Britain, maybe like 20, 30 years ago, and not in a bad way, just, quite villagey with like little French nuances around, which is quite nice. It's just a cool place. Yeah, I would recommend it. Different way of life, because obviously two of them are locals, actually. So born and bred in Guernsey, so it was good to see that experience and like a bit of boat life as well. And there's a little island. There's a few islands obviously around there, but there's a little island across from Guernsey called Herm. So we went over there one day, and but they were just like, yeah, we just come here all the time, but you have to get a boat over there. It's just different to what I'm used, different to Dubai and stuff as well. So it was a really cool place. Lovely restaurants as well, actually, to be fair. So really can't complain. Quite for me, it felt quite traditionally British, a lot of heritage and history and stuff like that. So there's a lot of history, actually. It was really cool. Really enjoyed it. On the work front as well. So so we'll start with the investor side. We've got an investor invested in one of our clients' deals, actually. So which we're involved in as well as a team. Basically, it's been a long time coming, basically. So he's really happy there to get going. Wants to move quick on that. We are waiting on that completion. It's aiming for the 18th of August. It was. So that should be wrapped up this month, basically. I can't believe it's August already. Yeah, yeah. I met another investor and just told him about a couple of deals that we're involved in, and she seems rather quite keen. And then there's a deal as well with a client we work with from Guernsey as well, funny enough. And I would say it's going to be deal of the year as well. I'm just going to put it out there. You're going to love this.
Really? Okay.
Yeah, it's deal of the year for sure. So they've done a good job as well, being involved with that with us. Obviously, the numbers stack effectively. I won't give away too much, but effectively, it's quite a low multiple, and they're using a lot of cash in bank to pay it as well. So it's like it's a good deal. The owner's very happy. The owner's really nice. Looking at retirement, he really likes the client as well, which always helps, and believes they're the right person to take over the business and move it forward. They got someone quite young in their team to kind of help grow that as well. I guess it's sort of like effectively like a CEO of the company. So yeah, that will be, I think it's a win-win basically with where the current seller is at as well in his life. I think he kind of got put off with maybe some more corporate people, and then they've got this young guy in there to kind of grow the company with a bit of energy, basically, I think is what he's getting at. So very like traditional product as well and service. So yeah, that'll be interesting. I can't say too much. We'll talk when it's done. We can have them on, to be fair, to talk about it in more detail, but just obviously NDAs and things like that. So very exciting. They're considering such a small island, but obviously, there's quite a bit of capital floating around and things. So and of course, it's like completely different tax system to the UK, which helps.
It's crazy, right? Like I think I just Googled then only 65,000 people is the population there. That's like when you think of, I said this financial services make up a huge part of our economy. It's a bit crazy, really. Some of the statistics that just came up about Guernsey. So,
it's quite hard. It's quite hard to actually. I don't know how practical this is, but the rules are it's quite hard to actually move there. I think you have to. The rules are so if you get a job there, right? Let's just say it's a job. If you get a job there, they have to offer it to a local first, and if there's no one suitable, then they can like give you a visa effectively. So
yeah, it is like that in a few places, right? But I think when you only got 65,000 people to choose from, it does, and I guess quite a lot of them are probably relocated there. Like there's a lot. I remember going to a few Guernsey fund admin meets in London, and a lot of people just moved there for just holding setup structures in general. So if a lot of people have gone there already wealthy, so the job market, I suppose, you got no choice probably but to look outside of Guernsey, because if out of that 65,000 people, I don't know how many people that have purposely moved there because of the tax benefits.
Yeah, there are some big companies set up there though, all past the PwC office obviously as well, like big Barclays building and stuff. Some like private equity people as well. So I guess it's finance or fishing basically.
Well, it's PVC, family offices, the trust administration, all of those structures there. Guernsey's known for them, right? So when you have like 0% corporation tax, like no VAT, like it just is all of a sudden. I think what's the income tax there? Is it like 15-20% or something?
20%, yeah. I can't remember which way around it is actually, to be honest. I think is it 20% on the company and then income tax is 0. I can't remember which way around it is, or it's the other way around.
So standard income tax 20%, no capital gains, no inheritance, no wealth, no VAT, no stamp duty or on share transfers.
Okay, that was it. Yeah, it was that way around.
Most companies pay 0%. Yeah, most companies pay 0% corporation tax. Exceptions are banking businesses at 10%, and there's certain regulated utilities and some property income that is 20 as well. So.
Okay. Just speaking of property, the market there they've got on. I think they called it on market and off market. On market, I can't remember which way around it is again, but one of them only Guernsey people can buy those houses, and the other one's non-Guernsey people who live there, basically. Yeah.
Oh, right, okay.
Yeah, it's a cool place. But funny enough, actually, not to turn it into a history lesson, but a lot of the wealth was generated from privateers. So it's effectively fishermen were just like, this is like years and years and years ago, right? Hundreds of years ago, they'd go out into the sea effectively and find gold and then bring it in. And a lot of the rich families are descendants of those fishermen, you know? So that's how a lot of it got built up.
Nice bit of history there, Mike.
A lot of history there. I liked it.
Yeah. Yeah, because I googled some facts. It says that it's one of Europe's leading jurisdictions for the ultra high net worth families, and the reasons apparently are political stability, English common law roots, sophisticated trust law, strong confidentiality, and has legal limits, experienced professional services, and stable regulation. All the things the UK doesn't have. But it also says 1,000 investment funds and related structures over there, like PE. Yeah. So, yeah. Guernsey and Jersey are known for it, though, right? Like some of those, like I said, the fund admin meets. There's always Jersey, Guernsey meets, and some pretty cool things that people are doing in those jurisdictions as well. And it makes total sense. The UK is obviously quite a hard environment to operate with some of those structures, so it makes total sense.
Yeah, no, it was awesome. And then we've obviously progressed with another one of our clients' deals as well. Oh yeah, so that fund, I don't know if we talked about this last time, but the funding changed on that for the better. So
yeah,
there was a bit of a last minute. So this deal's been going on a few months now. Funding's all agreed. They're kind of chasing our client to push on the deal. There's a couple of stalled moments basically, but so the lender is chasing our client to kind of push it through. And very, very last minute, after everything's pretty much agreed and signed, they've sent him the final legal work. Someone in the team has basically picked up that you can do an element of seller finance, which the whole time it's been a bit of that involved, right? So, it's ridiculous. Finance broker is not being very polite and to the lender, and so we kind of quickly went elsewhere, got another lender in very, very quick actually, and they offered kind of a better package, not quite the same, but better, I would say. And we've gone back to the first lender, and all of a sudden they've kind of changed their tune and decided they want to lend a lot more. Which, to be fair, I didn't know they could be that flexible because they're quite a well-known bank. And now we've kind of playing both sides a bit, and it's just worked out really well for the client, to be honest with you. So we're in a good position of negotiation, and that is a bit of a lesson there, as you well know. So to have multiple options always, but so that was an interesting
high street
one.
banks, though, right? High street banks for you. We won't say which bank, but they didn't want the deferred consideration to run simultaneously to the debt, right? But as you said, they knew that from early on. It just shows, I think that shows the lack of confidence in underwriting. Like, who's looking at that? Is it to say yes, and then you're basically 2 weeks out from closing, and this facility's pretty much been in place for quite some time now. To only pick that up now I think is a bit crazy. But yeah, as you said, you guys jumped straight on it. Another lender's at the table, and it's better to have those options, right? And also, I think that like you said, there's been an increase in funding now. So, it's like at the start, it's like getting blood out of a stone in some cases, and then all of a sudden, it's like, do you want some more?
It's like buses a bit. But speaking of that, got off a call with a finance broker the other day, and like so many people who had deals. It's just there's a lot we've put into funding at the minute. There's a lot. Yeah, I kind of had a rundown. I was like, wow, okay. So what you're saying about the confidence and the rates, I mean, obviously that's a new announcement, but I'm seeing the confidence. It's a lot more active at the minute. We've personally got a lot in funding, so it's like, I mean, I think to the point it's like caused a tiny bit of a delay, whereas you might hear back in 7 days. It's like just stemming over a bit more. So but very, very active, and that that particular lender I'm thinking of actually as well, they actually just got, I believe it was £100 million fund to lend against. So it's definitely not, and I know a few others have as well. So yeah, very active it feels like at the minute.
Oh yeah, the private debt markets is going crazy. So
Yeah,
you know, there's a lot of, like, look, at the end of the day, anyone that's selling debt needs to be selling it to people that are active, right? Fortunately for us, we have quite an active network of people, so you do start to build quite good relationships with those lenders directly or through your finance broker, because you're giving them a lot of work, right? So, and as you said, it is very, very active at the moment. I feel that people, I think, like, the more experienced, like, deal makers understand this market a lot better than the inexperienced. So when you look at someone who's never probably completed a transaction before, they look at this and be like, well, you know, the UK economy is quite uncertain. The political landscape's a bit volatile. Rates are still, like, not high in, if you look at history, but compared to what they have been over the past 10 years, they're still quite high. So people get quite worried, right? And if you don't understand, like, a creative deal structure, or you understand, like, raw deal mechanics and how to do it, it has become quite challenging to get deals done. Whereas, like, a more experienced professional deal maker looks at this and it's like, as soon as those rates start to drop, inevitably at some point they will, valuations will start to go up, and then all of a sudden people become a lot more aggressive and want to be more active in the market. Whereas the people that are buying in this market and can still understand deal structure, all of a sudden they're buying, this is going to look super cheap, right? When you look at the States, right, we spent quite a bit of time over there this year, right? When we're looking at and dealing with people over there, and they're paying silly premiums for very small companies because the market's so buoyant, because the availability of credit is just there, and you lower those equity requirements to get those debt facilities, then the market goes crazy. So you end up paying 4 or 5 times for something that probably definitely doesn't demand those sort of valuations. And I think that what we're probably going to see in 5 years from now, or within 5 years, is the exact same thing happen in the UK. If we can get a bit more of a stable outlook on the economy, and things start to move in our right direction, which hope they will, then anything that's being bought today is going to look like an absolute steal. And it's why a lot of our US clients are constantly asking us what's going on in the UK, because they're seeing, like, lower or middle market funds that they talk to and they're in the space with, and they go into all these meetups or whatever, and those are laser focused on the UK because they believe assets are cheap. So, you know, being in the UK and being active and buying in the UK, we need to capitalize on it and make the most of it now, because in 5 years' time, if a lot of that US capital comes over here, they're going to be willing to pay those, you know, 1-2 times earnings more than that person looking for their platform acquisition.
Yeah, absolutely. Well, they are coming over already, right? We've seen and heard of it as well in certain sectors too. So it's only going to get a bit more livelier.
Yeah. So just quickly on that, Mike. Sorry, go ahead.
Well, I'll tell you what's. Go on,
go on, you can go.
You go. It's a sort of different subject. Go on.
Yeah. So just quickly on that, what we're probably going to see is, so you look at, like, the mega deal volume, right? So you look at deal volume and you look at mega deals. US capital's already flooded Europe, UK and Europe. Okay. So what we're probably going to see is, and this is why we've got a good, like, 5 to probably 7, maybe 10-year time horizon on this, in the sort of small business, lower middle market sort of space. They're flooding the money into that part of the market. Then what will happen is there'll be a lot of competition, which is already there now at the moment. So this is already going to start to happen. Then you start to see, okay, the sort of upper middle market starts to get active, then the middle market, then the lower middle market, and then they start looking at SMEs. We're already seeing them buying SMEs now, but if there's something very specific. But what you're going to see in the next 5 to 7 years is what you're seeing in the States right now. They're buying up small, I say small, like, for like there's like buying a small business is not small, but you're seeing them buy 1.5 million EBITDA HVAC companies for 18-20 times, right? So, you know, I'm not saying that's going to happen in the UK, but we will start to see those crazy valuations, I think 5 8, maybe even 10 years from now, as you start to see the market get more buoyant and that capital flood into the market. So we're in a really good position and time right now to be able, if you want to go on a buy and build, I think it's a great time to start that now, especially in certain industries.
100%. I was sort of adding to this point, actually. That's similar to what I was going to say. We've been through a few cycles of this, right? When there's periods where the multiples are crazy, I always find it funny. It feels like people are less willing to sell, right? Hear me out. It's less willing to sell there, but more people want to buy. And it's like a fear and I don't know if you agree, but it's like a fear and greed index, right? So it's a classic one. No one wants to buy Bitcoin when it went down to $16,000, but everyone wants to buy it sort of $75,000 to $100,000, whatever it hit in the end. Everyone wants to buy there, and it's the same thing, I think. So now is that low $16,000 Bitcoin? I honestly think so. Because. Yeah, like we said, we've been through that. I never forget people like, no, I remember people were like up at an 8x or like a 13x, and they were like, no, I'm not going to sell, I'm going to hold out. And then, like, honestly, 6 months later, they'd come back and be like, where are we at now? And it's like, well, way down. And they're like, yeah, okay, and do it. And I just think mental. Yeah.
Well, the best time to sell your business is when you're doing well, right? And of course, like the macro environments plays a massive role, probably the biggest part when it comes to valuation, unless you have a strategic acquirer that's really knows what they want and they're happy to pay up for it because they need it, right? Like that client in the States, this specific asset they want us to go and acquire for them because of what it does to their actual current business. They're happy to pay up for that asset and they're happy to save 2, 3, 4 years building that asset inside their business and then trying to find customers, right? So there is a time and place. But yeah, it is exactly that. I think that's true of any asset class. I think that, if you look at history of, post 2008, there was a lot of people very, very scared to go into the housing market because of what had just happened. You just said the same happened at Bitcoin. The same happens in the stock market. Everyone says we're topping out. Everyone all of a sudden wants to sell. No one wants to buy. When Tesla's at an all-time high, and then it's the same of every asset class. And I think that is a game of emotions as an investor. I think this is why it's so important to have strict investment discipline. When you understand what it is you're looking for in any asset class, like don't try not to deviate from it. And it's about having the right people, or whether that's friends, business partners or advisors around you, to make sure you are making silly decisions, because it is very hard. You get quite emotionally attached to an investment or an investment idea. And when you start to see all the positives, you naturally start to look for confirmation bias because it's something that you want to do. If you don't have the right people around you, it's very easy to dive into something that looking back, you probably shouldn't. And unfortunately, in most asset classes, you can't reverse a lot of what you've just done. So whether that's placing a trade and you start going into the red and you don't have a stop loss, or whether you're buying a business and you're basically just formed, there's no different to a marriage, or whether you buy a house, all of these things are very, very hard to reverse once you've dived into them. So I think investment discipline needs to be right up there with above everything, and making sure that's what you're looking for, that's what you need to focus on and don't deviate from it.
Yeah, absolutely. Yeah. No. Spot on.
Yeah. Okay, so moving on from there, Mike, you're basically running point on a family office we're working with at the moment. You're sort of managing the team that's involved in it. And I think that it's probably the best team we've ever put on a project, I think. So really looking forward to the outcomes of it. But yes, you're running point on that, mate. How's that looking? I know things have been launched over the last week or so.
Incredibly busy, which is always a good sign, because just literally last Monday was an official launch, and we've got a bit of help with Chris and some of the team as well, taking calls. The calendars are booked out of sellers, which is great to see. They've got quite a specific criteria, which always helps as well. And yeah, just absolutely rammed, to be honest with you, which is always encouraging when you first start, is literally straight away. So I'm very proud of that one going live, and it's just continuing. So I mean, Chris I'm catching up with him at 11 a.m. He has sort of kept me up to date, but we've got a few deals already on the table, and kind of, I think he's chucked them through finance, like through accounting, basically. to see if they stack. And then we're going to be putting offers out this week already, just to kind of test the waters to start with, which is normally it's quicker than expected. But yeah, very, very encouraging, and really happy for the client as well. So it looks good already.
Yeah, and just to add to this, so we've worked with a few, I would say, smallish funds, right? And now we're seeing a lot of activity from family offices, which naturally, most family offices that we worked with in the past, whether through on an investment scenario or mainly on the real estate side, they're very much into wealth preservation and very much risk adverse because they're trying to protect that wealth that's being created. Now, what we're seeing a lot, and this is one of a few that we've been speaking with. These guys are a little bit more active and more aggressive, but family offices are becoming very agile and very active. I would say in some cases even more active than private equity. They can move a lot quicker in some cases too, depending on the structure and governance of those funds. But they're very strict on how they deploy the capital, but I'm very focused on sort of the downside protection because of the wealth that they've created. But the value creation piece of this, I've been so surprised on how, I would say, I suppose the word is active, but active, aggressive, whatever the word is, they are of getting things done very, very quickly. Where in my experience previously, they're happy to wait it out. If it doesn't happen, it doesn't happen. And they don't try and force anything through. Whereas I think that this family office in particular are very much focused on speed and sort of compressing time, which is nice to see. But yeah, when I'm looking at the chats that you guys are in, my God, that is very, very active. And yeah, I'm quite interested to see the speed of how this one progresses. I know they want to make multiple investments over the next couple of years. But yeah, one moment. We got a question come in. So Steve asked, "Hi Mike, explain more about what you're doing. You said you've got a pool of sellers. Did I hear that right?" So I'll tell you what would be good to just elaborate on that with Steve is if you want to talk about the family office buy side situation, and then we can talk about a client that we're working with that we're taking to market at the moment in the financial services space. So if you want to just give Steve a bit of an idea, or anyone listening, what we're doing on the buy side stuff for the family office.
Yeah. Okay. Hi, Steve. Hope you're doing well. Thanks for the question. What's my secret sauce? First of all,
Yeah.
No, look, we're just about volume and aggression. I don't mean like physical, mental aggression. I mean just deal volume. We're not threatening people to sell their business. We're just very, very active on all channels. Letters, sending people out there, cold calling. Anywhere we can get hold of them, we'll kind of hunt them down, metaphorically, so to speak. So yeah, it's just about having enough people in the team to do that as well, because there's multiple people involved in this campaign full time. So it's quite a bit of work which we handle, and we've got systematized, obviously. So yeah, it's just a volume game, isn't it? And to be fair, obviously, look, not to sound egotistical, but I think because of our credibility now, people do respond. We've built up over time, and yeah, it's quite an easy kind of conversation to have, to be totally honest with you.
Yeah. So Steve, essentially, family office is looking to go on a buy and build themselves. They've been very much real estate focused previously. Now they want to get into pretty much SMEs, buy, build, roll up, and sell. So we are their fractional M&A team. So rather than them going out there and having to find the deals, structure those deals, and then close those deals, we go on that journey with them so they can focus on their existing portfolio. And then we slot in as their fractional M&A team. We do all the deal origination, all the negotiation, all the deal structuring. We help them with the funding stack. And then we essentially move it through due diligence all the way to closing, and then we put together a bit of a value creation integration plan in place for them, unless some of them have teams to do that, right? So we basically we're there normally focused on, say, the organic growth. That doesn't then suffer when the same people get put on the acquisition growth. So we kind of we work with them on an arrangement will we do their acquisition growth on their behalf and do the whole process for them. So I hope that helps. And then on the sell side, Mike, so talking about one of our other clients, this is we've been working with a client in the financial services space, prepping them for exit. They built an incredible business over the past 15, 16 years, one of the biggest in their industry. They've had a few absolutely wild years of growth. I mean, crazy years of growth, thousands of % in growth. So now is a case of us prepping that business for sale over a period of time and making it commercially appealing enough for an institutional grade investor, which this is definitely at that level that would attract that sort of investment. But of course, there's a process that needs to go through, which is very different and much more intricate and detailed than selling a small business. So again, on that project, we have an incredible team member that's, I would say, running point on that at the moment, and they've done a great job. They've worked on some huge things. So it's for us, it's really delivering the client, delivering on fulfilling on what the client wants, right? Because I think that this space is very much known for what are you actually getting. Are people there for billable hours? Are they actually going to get? Are you going to get out of it what you're paying for? And we felt there was a massive gap in the market for that exact service, whether that's on buy side or sell side. Fortunately for us, our entire team have been on both buy side and sell side for personal acquisitions or divesting companies. So everyone's already been on both sides of it. So people's been through their emotional journey on buy side and sell side, which I think is quite unique, because a lot of the companies that you will normally work with, and that's no disrespect to these other companies because they also do fantastic jobs, but a lot of them haven't been through that. So we've kind of got a team of entrepreneurs that have been on both sides of it, which makes it quite fun, because being in the mix and the trenches of deal making is always fun. And if you can work with someone also who's built a bit of an empire, it is even more fun. So yeah, absolutely,
yeah. It's a very exciting project and a great owner as well, and he's got a really good team also. And to be fair, he looks like he's stacking up for the next few years to continue that growth as well. He's got a lot going on, so yeah, that's going to be an exciting one for sure.
Yeah. Also, his kind of, he's already building his own sort of family office now to go and do other things, right? So who knows? Who knows what he wants to do? But yeah, so essentially, anyone listening, guys, what we do at 5DCP, we offer both buy side and sell side advice, but also we have a fractional M&A service which allows you to kind of keep focusing on organic growth. And we focus on the acquisition growth for you. So the perfect case scenario is you have a company that's growing organically fairly well. So I think, it's fair to say, I think decent organic growth or sustainable and consistent organic growth is going to range between 10 and maybe 20% a year. So if you're focused on that and you're driving the business and you're grabbing that 10, 15% a year, then our goal as your fractional and M&A team is to grow your same business by 100 or 200% a year. So now not all revenue is good revenue, right? So yes, we're going out there and buying revenue is faster than generating revenue, but we're out there focused on buying good revenue and good companies for you to enhance your ecosystem, not just buy stuff to buy stuff. So that organic growth is where the stability of the business comes from. So when you bring something into your existing ecosystem, it needs to complement what you're already doing. And I think that's the good thing about having someone full-time on the M&A side and also full-time on the organic side as well.
Well, to be honest with you, it is more than a full-time job, hence why we've got quite a big team now. So there's a lot of moving parts in it, and to run the company as well, it is a lot. So, you said you enjoy the deal making. We absolutely love this. All of us do. And yeah, lots of moving parts, personalities, emotions to navigate, and it's just fun. And ultimately, you reach a deal that everyone agrees, buy side and sell side, that everyone agrees and is happy with, and you're meeting those requirements both sides. It is fun, Yeah,
and that's the important part, is that I think that a lot of people that first look at this, a lot of people come, unless you're already a business owner, a think a lot of people come from like a real estate background where the goal, of course, the goal is always to buy right. You want to make sure you're always buying right, okay? But I think that real estate, a lot of people that go through that sort of buy, refurbish, refinance, the goal is to get it as cheap as you possibly can to, again, buy right, to renovate, get the uplift, and increase the GDV. Whereas in this, and it is very much a win-win in that situation, but maybe I'm very motivated that, can't pay their mortgage or whatever their circumstance may be, there's only so much you can do, but this is very different. And the reason why is because when you buy a house, the person you buy the house off, you don't have to ever speak to them again. It's done. Transaction's done. When you buy or sell a company, the transition period's very, very important. Okay, so you have no choice but to create a win-win scenario. Okay, which one, it should be that way anyway because that's fair, but also that person at some point, whether it's 1 month, 2 months, 12 months, or 24 months, however long that transition period or arrangement is, you're going to form a short-term to mid-term partnership with that individual throughout that transition. Because when you are going through that period, they may not be involved in the day-to-day whatsoever. They may have a great management team and very, very hands-off, but they still have a relationship with the management team. They may still have a relationship with some of the customers. They may still be a big part of the culture when they walk into the office or when they come into the establishment or go on site or whatever the industry is. So it's very important that you do create a win-win, rapport is built, and everyone understands what is going on. It is very different to most asset classes because most are very transactional and is done. People walk away. This, especially when you're buying or selling SMEs, very different. Of course, at public company level, this is a completely different way of doing deals, right? So SME level is very much relationship driven. So you have to go through the process and you have to spend time and you can't cut corners. You have to do it. If you want a successful acquisition, I think it's very important you follow the process entirely. Don't cut any corners to get the best outcome because this company is something you're going to own for most likely a decent period of time. You want to make sure that it's bought right and the terms are correct and you've got a good relationship to a certain extent with the previous owner because you may need them more than you think.
Yeah, well said. Well said.
Yeah. Cool. Anything else you want to cover today, Mike?
Just the smaller one. We've had a little bit of a sale going on and we're almost there with that as well. So I'm excited to push that over the line as well. We helped maximize the value there in that company. It's in the leisure industry. And
difficult industry to sell in, right?
Yeah. But teamed up with a good buyer in the industry, knows what they want, what they're going to pay. The client was happy with that as well. So yeah, it's just pushing it over that final hurdle, which we're very almost there now. So yeah,
well,
very active.
You made that happen because that was a deal that probably wasn't going anywhere. So again, I think it's just having good relationship with the client, understanding true motivation of sale, from the client or sell side perspective, and also find the right buyer to make sure, again, you create that win-win. And I think that being in the middle of that, managing the, I suppose, different personalities is also quite difficult. But yeah, I think you spend a lot of time on that one to get it to where it is. So
I was gonna say it's a bit of luck, right place, right time. But like you said, you kind of create your own luck. And my whole thing with general kind of marketing is volume, like it always has been. So market it to enough people, you're gonna get a buyer. Literally blasted it. So and that's the result of it, which is great.
Yeah. Well, guys, I hope you enjoyed a bit of an update. We're going to start talking a little bit more about the projects we're working on, and as they develop, we'll be able to. I don't know. Maybe we can bring some of those people on if they're up for it. So I know some will be, but obviously at a certain stage, this is fairly confidential until you get to that finish line. But we'll be covering a little bit more, keeping you up to date. And yeah, guys, if anyone is interested in anything that we are doing, especially particularly on the fractional M&A side, just go to www.5dcapitalpartners.com. List of our services are over on the website, and hope to work with some of you soon. Mike, any final words from you?
It's going to be a busy week because I think the calendars are stacked. So get deal making, but yeah, drop us a message if you'd like to work with us in various capacities, and we'll come back to you for sure.
Sounds good. See you next week, guys.
Have a good week.